Hi, my name is Mick Morioki, a wealth advisor at Nabo Capital. And today, I want us to talk about liquidity. Liquidity is how easily can I be able to access my money when I've invested with a fund manager. Liquidity in mutual funds depends on the type of investment you're in or the type of fund you're in. So, for instance, some funds are short-term, mid-term, and long-term. The mutual funds that are short-term, like the money market fund, you can be able to access money anytime you want in 2 working days, depending on your investment horizon. So, money market fund, liquidity is very high. This means you can be able to access money anytime you want. In case of an emergency, you're able to access your investment. In case you want to pay school fees, pay for a trip, because those are some of the goals that people get into when they're investing in money market fund. Other funds that are mid-term are locked in for, say, 3 months or 6 months. So those funds are not easily liquid. Some fund managers will charge you an early withdrawal charge on when you want to get money before the said term. There are other funds that are long-term in nature, say the equities. When you sit down with a fund manager, if you're looking for liquidity and capital growth, obviously you'll go for your money market funds or the fixed income fund. But if you're looking to invest for a long period of time, say 2 to 3 years, and liquidity is not a top priority for you, obviously you will go with the equities, which is the equities or the balanced fund, which is a mixture of both shares and a bit of fixed income securities. In a nutshell, where you invest in mutual funds, you have to make sure that it is aligned with your needs. If you're someone who's looking to get liquidity, you need to be accessing your money maybe monthly or quarterly. My advice is invest in money market funds. You're able to get a rate of between 9.5 and 10.2%, especially in the Nabo money market fund, and you can be able to access money anytime you want. We like to call it a parking bay for the money that you need, maybe monthly or quarterly. If your liquidity needs are not very high, the advice would be get into a fixed income fund, whereby the funds are fixed for the first 6 months, but after that you're able to access your money anytime you want. And the fixed income fund obviously will have a higher rate than what you would get in a money market fund, around 11 to 12% per annum. So this is very good for mid-term investments, for capital preservation and also capital growth. Remember, the other funds like the equity fund and the balance fund are not liquid in nature. So there is money that you cannot access, say, in 2 or 3 years. You can only access in 2 or 3 years. Talk to us and we'll be able to walk you through different investment options.